Hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 pips rocking and rolling here, 18th of October 2015. Not making any trade calls or recommendations because only you are responsible for the trades you may decide to take. And the fact you're listening to this means you've read to understand. You accept all the disclaimers in the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? Hope everybody's had a great weekend. Let's get ready to go. I mean, a quick update, not an awful lot has changed since last week. Should be an interesting week. We've got a bunch of China data out overnight now, coming with the GDP, industrial production, and some other stuff. Then Tuesday is going to be interesting because we've got basically monetary policy meeting minutes out of Australia, so that's going to be interesting. We've got Carney speaking on Tuesday. We've got a bunch of FOMC speakers in that GDT price auction out of New Zealand, so it should be a fairly interesting day. Shaping back towards the back end of the week, which should be a lot more interesting. So then on Wednesday, we've got Bank of Canada rate and statement with a press conference. So it's going to be really interesting. Then on Thursday, we've got a bunch of data out of the UK, Australia, Europe. We've got the ECB press conference. So we're going to have not only the unemployment claims out of the US, but we've got Super Mario on deck, so on the dance floor. Then Thursday we have, Friday we have all the PMIs. So it's going to be an interesting with the core CPI out of Canada. So it should be a fairly interesting week. Okay, where does that leave us on the charts? I mean, first things first. In terms of gold, we're getting a very nice move. So again, no surprise to followers of these updates that we were looking for a base down here at the 1100s and rotation back up into the 1200. So we had a nice action here at the 1150s. We said we'd really not be focused on a 200 DMA. This level's been breached a lot. You know, these attempts to test these bigger moving averages tend to be a lot more interesting when they haven't been touched for a long time than when they have been touched in the near past, right? So here we've got a little negative close at highs with a little retracement here. Going into the week again, it could stay fairly choppy. I'd look at these past highs here to act as support. You know, as long as we can continue closing above this 1170s for the week, we should see market try to move back into the 1200. If we start to close back below, then we've got kind of a smaller range, 1170s and 1150s. But again, our outlook is still that we have some unresolved business further up in the 1200, and then that's going to be the pivotal level for a possible range shift, and then starting to look back at the 1250s. You know, similar action on silver. We've discussed that a lot in the past. What's going on cable? What's happening on cable? So we talked about an awful lot of chop as long as we stayed inside this 100 200 DMA range, and we're saying, you know, all things being equal, for even though we are getting a series of lower highs, we really and lower lows, we really need to get a daily close back below this level for us to start to get uber bearish, right? So right here we said a lot of chop. Watch these extremes, and we had a nice little move right back down into the 5250s, right? 5240s. It held and bam, shot back up. It's getting sold exactly where you would expect it to get sold if it had to, right? Which is at the 55 mark, and we'd be talking about it on Twitter too the whole week. 55 pivotal, 55 pivotal, 55 pivotal, you know, inside this mid-range. So there's some very nice shorting opportunities around these 55. So going into the week, that doesn't really change. Daily close below, this continues to be bearish for possible move back into that 200 DMA. Daily close above, bullish for an attempt to try and take a stab at these highs, this descending trend line, or at least move back up into the range. But keep in mind, as long as it's hovering around these two moving averages, it'll likely be very choppy, and the direction will most likely be given by daily closes above or below this 155 mark, okay? So if we're looking at Aussie, we're looking for that move back into the 74s. So we got up here, failed, came right back down. Previous support zone 7250, 7200, previous resistance acted as support, and then we got a little pop, and right here we've put in a lower high. So again, market here is starting to chop around with a series of higher lows and lower highs. We'll have to see what's happening. Broadly speaking, as far as we're concerned, there's an awful lot of chop inside this kind of triangle pattern, but really for us to get out of the chop, we need to get daily closes above 75 or daily closes below 72. Inside this whole area, very, very choppy. We'll have to see what happens. We've got a lot of data, but clearly if we hold this, there's no reason why we can't take another stab higher. The correction may not be over yet. Kiwi, what's going on Kiwi? Similar pattern. We're looking at this nice little basic pattern at lows to give us a stab back at the 68 mark. 68 mark becomes pivotal. Daily close above, below, bull bear line for the week. If we close below, we would expect this descending trend line here, which was previous resistance, to be tested again. As long as we close above, then we would suspect that we've got more room to go up to the 71.70s, 71.50s, 71.70s. So right now, the way we're looking at it is any correction back down into this trend line is a corrective move in an attempt to continue to rotate higher. This outlook will no longer be valid if we start to get a daily close below this trend line. Again, we're not a huge fan of lines, but you know, here it is what it is, right? A EURGBP corrective inside this chop range. We said we needed to get a daily close back above the 74.80s for this to turn more bullish and to see more of a correction to the upside. This is holding some very nice shorting opportunities around this level right here. Let's see what happens. As we said, unless we get a daily close outside above 74.85, unless we get a daily close back below these lows, we consider this chop, chop, chop. A lot of chop inside this range. This could be a hold of these highs for a move back down. It could be a little correction back down for then a move back up. You know, it's very, very difficult to call this unless we get daily closes outside this level. Expect to see a lot of choppy action, but probably we could get some good two-sided trading inside this range. EURUSD, what's going on EURUSD? Again, we're talking about the fact that as long as we held these lows, we could easily see a move back up into the 115, possibly 117. We also talked about the fact that we would expect the central ECB to try and talk this down. We actually tweeted out on Twitter, luckily enough, just like after about 15 minutes, Novotny came out and talked this down. But again, very, very choppy here. If you look at the chart looks like it's bullish. It looks like it wants to correct higher. I think there's a problem with a lot of the structural trades that are being put on, and you know, the ECB, which will likely try to talk this down. So we could see a lot of chop. So the problem with this chart we see is that there's a lot of chart resistance inside 15 and 17, 115, 117, and on top of that, you're likely going to see the central bank try to talk it down. On the other hand, if you start to move to the downside, you've got huge congestion with all these moving averages right back down here. You see you've got the 50, the 100, the 200. So basically what that means is that we're seeing, we would expect to see a lot of choppy trade inside this range. We think that the edge is trading the extremes, not getting stuck in the middle, okay? Not getting chopped up in the middle. USDCAD, we're talking for a correction. We're talking about a move back into 128s. Right here, you see we've got nice break back down, and the 100 is trying to hold. Now, again, this is a very interesting level. This is a very important level. If you look to the left, you see this previous resistance is now acting as support. If this lets go, then we could see a much bigger correction. Now, probably this is another interesting way to look at it on the weekly. If you see this is the 100 and the 200 on the weekly, right? So you see how important this zone was. If you look back, this market got sold hard here. So the big question is this a false break above this zone or not? So if this holds as support, then we could be looking at 135s, 140, 145s, you know, continue to move higher. But if these 128s can't hold and we continue to trade below, get daily closes below, then there's no reason why we can't get a much bigger correction. Now, I suspect everybody's going to be is going to be expecting the BOC to come out and you know, try and jawbone this to get this to pop higher again. So again, the focus is, you know, the daily chart with these three moving averages, 50, 100, and 200 is probably a good guide. Bull bear line here, mid range, 50 capping to the upside, 200 capping to the downside. I think that's probably a good roadmap to have on your chart. S&P, what's going on the S&P? Again, last day of September, we said we would expect this to close positive. This looked like it had a mid-tone. We'd expect to move all the way back into 1950s being pivotal for a move back into the 2000s. We talked about the fact that this was a very, very aggressive move. We would no way be looking to short it to 2000. We would be looking for tactical opportunities, but the way this stood, we'd suspect this might have to move back into the 2040s range and looking for tactical shorts, but we expected that if it failed, it had to fail from a higher level. Lines to look for the week: 2050s, 2000 rather. Bull bear lines for the week, a lot of chop inside the zone. We expect there might be interesting shorting opportunities on approach to here. There might be tactical longs intraday on approach back into the 2000. Structurally, from a bigger picture, we still like the fact of looking to try and build some swing shorts around this level, but be very, very cautious if this starts to close back above the 2050s. What else have we got? Germany. So right here we talked about this 10,000 being the bull bear line, right? As long as we continue to hold above, we expect this having the potential to correct a bit higher. It's a very similar chart to the ES, but basically this is the bull bear line. The chart is available on the blog. You could look at it and all the levels. Last but not least, USDCHF. What's happening here? We're looking at action at these lows. As long as these lows here, we think we could see a lot of two-way action around the 95.30s. Daily closes below bearish for a move back to the 94.80s, 94.50s. Daily closes above. We'd expect this to try and rotate back to the 95.70s, 96s, possibly higher. Okay, guys. Not an awful lot has changed. Pretty much every single one of these charts is on the blog. If there's anyone that's not there that you want me to post, just hit me up on Twitter. I'll post it. Wish everybody an awesome week. Thank you so much for listening. Have a great one. Talk to you guys soon. Take care. Bye-bye.